Today in the grain market, corn was steady with the new highs did bring in some selling and kind of temper the market a little bit. However, the range today had a higher low and a higher high, so it tells me that the uptrend is really still intact. It certainly looks like the carryout could possibly get to that 1 billion bushel mark. If that happens, then we could be looking at $6 corn, maybe $6.20. That looks like what the objective is. Now, we've got strong demand that really has been underpinning the market quite a bit. And of course, with the corn on the Dalian exchange in China is trading at 1080. All these factors really are kind of a bullish to the market right now. The option open interest on the 520 strike did jump up to 25,000, and the $5 strike is sitting at a whopping 39,000. It could come into play once expiration comes on the 19th in the next couple of weeks. So that's something that we're going to be watching overall. So just to start February, we had just a little pullback. Now also with soybeans, it was easier. I think that the futures trade is more consolidative even than corn. And it looks like the average trade guess for the crush is so big that it could be the highest ever. So things like that, when the highest and the most and the first are usually things that underpin the market and keep it pretty strong. Right now, that would make the beans objective more at the $15 or $15.50 level. So of course we're throwing out all these numbers, but they're really possible. And as we get more and more news to underpin it, we can see that the market continues to look strong, even though we did have it a little bit easier. Now, of course, it's overbought, and maybe the market's a little bit exhausted to just start February. But I expect that there's going to be a lot more volatility. Right now, in the May option volatility is sitting at 27.5%. That says that the market really is expecting more volatility ahead. Now, the open interest on the $13 strike is 20,000 contracts, and the 13.20 is 14,000 contracts. That makes it pretty weighty on the downside to pull the market lower. Now, there isn't as many open interest on the high side. However, the open interest goes all the way up to the $17 strike, with the $16 and $17 strikes all trading with 6,000 open interest each. So, there is going to be a little pull in the market, and we just want to watch out in case some of these options, as we get closer to, if we get closer to expiration, that there could be a little more of the tail wagging the dog. Now, of course, a week from tomorrow, we have the USDA report. So that's another news that we're going to be looking for that's going to have effect on the market. So we expect a lot more bouncing around here, at least for the first week of February.